Well, hey, everybody. We're live in here. I won't sing the song about being in living color. I don't necessarily like when I sing the songs. Oh, what's going on right there? Other side. There we go. Little hair that's hanging out up there. That always happens. I come on live, and as soon as I get on live, I notice all the things I need to all the things I need to change. I'm like, well, let me see what this is. What is that? Is my lipstick on? What's going on? It happens every time. It happens every single time. Hello, everybody. Hey. I wasn't on Friday because I didn't have internet. That's pretty much the reason. If you're in my community, you probably saw the email I sent. It wasn't long ago. I sent an email and I was talking about how I didn't have internet since Thursday. Thursday after the market closed, my internet closed too. Don't know why. I mean, I do know why. It was because of the storm. The timing of it was what was, interesting. But it did close, and after that, it never came back. They're supposedly still working on it, but it turns out that I was already scheduled to change my internet over from the people I had to the people I was going to. I'll go with that. I won't call any names, even though that internet from Comcast is still not working. I won't call their name, but I will though. They're still not working. They say they're still working on it, but I wonder if they're going to adjust the people's bills. You think they're going to adjust the bills of the people whose internet is not working after all these days? Like, you need to give me not me, maybe them, maybe me too, because I'm still at this point haven't canceled it yet. So your internet closed too. Yeah, my internet closed the same time the market closed. Pretty much. It was literally right after that. My internet said, we good too. We made it. We helped you get through the trading day, and now you on your own. But I wonder if they're going to offer people credits. I wonder if they're going to automatically, people shouldn't have to come and ask. Shouldn't have to call and ask, are you adjusting my bill? They should automatically give it credit to everybody whose internet is checked, because they know exactly whose internet is off. They know exactly. And I'm sure people have been, it's a good thing. They're probably glad it's the weekend, because if it wasn't, people would be standing up inside their little office at Xfinity. Well, they probably opened yesterday. Go be standing up in there saying, hey, my internet is not working. What's your plan? The first day they sent us messages all day long. We're going to have it up and running by 6:20. We're going to have it up and running by 9:50. I mean, all these random times they said they were going to have it up and running. It never did. The next day, not one email, not one text message, not one email, not one nothing that said, we know you don't have internet and we're sorry, but we're working on it. Now, you had to assume that they're working on it because, I mean, really, they're working on it because people calling. But it's like, why you was texting me yesterday all day? Then finally on Saturday, they sent a text message sometime on Saturday saying, we're still working on it. That's all they said on Saturday was, we still working on it. And I was like, oh, Lord, you're so good to me, because I was already scheduled to get switched over to fiber. And y'all have to tell me whether the fiber seems to be doing better than, what I had previously. And I had the most powerful and the most expensive version of the internets before. So when I realized I could switch over to something that worked better and I could pay like 1/4 of the cost, because it's literally about that much. I was paying 4 times as much. I won't go there because I can think back to all the bills I paid and like, well, you know what? I should have made this move a while back. Either way, we're here. And I hope you all are doing well and having a good weekend. Hope everybody's having a good weekend. I want to see. And like, well, you know what? Says that I'm live on Twitter. We're there. We're over there live. My hair wants to do crazy, so I'm just going to leave it because it's like showing up a lot more on this blue than it usually does. I don't know what that's all about. Okay, so let's go through our plan for the week. I've talked long enough, giving all the platforms a chance to tell the people that we're here. YouTube, hello into YouTube land. Howdy, howdy. Hello in the Instagram land. Hi, hi. Hello in Twitterville. Hello. And who else am I? Oh, Facebook. Hello on Facebook. Hello, my Facebook people. Howdy, howdy. Been a good weekend. Can't say I'm complaining. Not at all. It wouldn't matter anyway. But I spent some time yesterday with our community doing some training, and we learned about VWAP yesterday. I believe it was value added. It was value added for me, and I believe it was value added for them as well. But that's all a part of our charting challenge that is still going on. Actually, it's wrapping up. Our charting challenge for the month of, what are we in? September. I really want this to be October. The month of September is wrapping up. We've got a couple more sessions and we're going to wrap it up, but it's going good. I think it's been going very, very well. I really do. I really, really do. Okay, let's go on to where we are. Okay, I got that up. Add to the stage. This week, what do we have for earnings? Not a lot. We don't have a lot for earnings this week. Y'all see this? We got Carnival on Monday. Carnival Cruise Lines is going to be on Monday. Paychecks is on Tuesday before market. McCormick, the seasoning people, the spices. This is not McCormick and Schmeck. This is not the restaurant. It's the seasonings. Acuity Brands and Unify, whichever. Nike is Tuesday after close. Now, Nike's had some issues here recently, but I think they changed CEOs or something. Was that Nike that changed CEOs? Yeah. So they should, well, that won't matter for this set of earnings. That what may matter is what they've done so far is going to be what they may, where they might get some reprieve is their forward moving guidance, because the earnings is two pieces. How did we do so far, and what's our plan moving forward? So Nike may have a plan moving forward that will keep investors interested. Lamb Weston is also Tuesday after close, and RGP. Wednesday morning we've got RPM and Conagra. Wednesday aftermarket close, we've got Levi's. Thursday morning before open, we've got Constellation Brands, which is STZ, and Angio Dynamics Thursday morning. And then Friday morning, we've got Apogee. Okay, not a whole lot. We're kind of winding down the season. Hey, Tanya. Kind of winding down the season. Jamie says they'll adjust the bill of the squeaky wheels if they call in. I don't think people should have to call in. I really think they ought to, because y'all know the people who don't have no internets. Y'all know the people who don't have intranets. So go ahead and just credit everybody's bill. Suck it up, bite the bullet, and just credit everybody's bill. Okay. Let's go look at what we have come in. Got to share my screen. What we got coming as far as meetings and stuff next week. Okay, I'm going to allow that. Yep. And, well, maybe I can show you what's happening next week. There we go. In the wrong place. Why did you move down there? It's a good graphic, though. Follow one course until successful. I won't even get into my soapbox about style drifting, and in strategy drifting is probably a better phrase for it. Strategy drifting, where you're drifting from strategy to strategy. I wouldn't know nothing about that because that doesn't include me. Yeah, right. I'm just telling you it does. It does. I have to focus, Arlissa. You got to focus. Okay, here's our plans and meetings for this coming week. Monday morning, before the market opens, we've got FOMC member Bowman speaking. At 9:45, we've got the Chicago PMI. That's right, right after market opens. And then look at here. Can somebody look at here? 1:55, we've got Powell speaking right in there on Monday. Y'all already know he starts talking and volatility follows. Let's see what he's talking at. Let's see what's going on. He's participating in a moderated discussion titled A View from the Federal Reserve Board at the National Association for Business Economics annual meeting in Nashville. Anybody ever been to Nashville? I've been there. I liked it. Or did I go to Memphis? Oh no, I've been to both. I've been to Nashville and Memphis. We stopped in Nashville going somewhere else and had some of that Nashville hot chicken. It was uncomfortably hot. It's like I couldn't even enjoy the chicken because my lips were burning. My lips, my tongue, all that. I'm not a spicy. I like spicy food if it's got flavor. I don't want hot for hot sake. I want hot for flavor's sake. And anyway, that's what we did in Nashville. We got some Nashville hot chicken. Pass. I'm good on that. And then public started adding it in. Other people started doing it. I'm good on that. I did like Memphis though. I did like being in Memphis. So anyway, the usual effect of Jerome speaking, Mr. Powell speaking, is more hawkish than expected is good for the currency. We'll see. I was going to say, his time is up. Fed chair, February 2018 to 2026. Does he have like a window of time he gets to be the Fed chair? Does that change? As head of the central bank, which controls short-term interest rates, he has more influence over the nation's currency value than any other person. That's a lot of pressure. Traders scrutinize his public engagements as they are often used to drop subtle clues, regarding future monetary policy. You know, I've listened to him speak, and I think he's really good with not dropping any subtle clues. You know, he don't drop no subtle clues. He says what need to be said, and he's very, polished as far as his answers go, maybe because he's been doing the job long enough to know people try to trip him up. He does not fall into the traps, not from what I heard. Hey, Stacy. Hello and happy Sunday. Jamie says Memphis is like barbecue heaven. Yeah, it's a lot of barbecue there. Okay, so Tuesday, we're going to have manufacturing PMI is going to both happen right after market opens. Job openings 10 o'clock. ISM manufacturing prices and construction spending. That's all first thing in the soon after the market opens. All day Ward's total vehicle sales. That always is on here, but it doesn't really show any. I'm not seeing it have any impact. And FOMC members are going to speak at 11 and 11:10. Bostic will speak and Cook will speak. And then several more of them are going to speak at 6:15, which will be after the market closes, okay? And then Wednesday, we've got OPEC, JMMC meetings, ADP non-farm employment change. That's 8:15. 9 o'clock, we've got FOMC member Hammock speaking and Musalem speaking at 10:05. Crude oil inventories 10:30. Some more FOMC members are speaking on Wednesday. That's all day. Why does this feel like last week? It looks the same as it did last week, but there's different dates, right? Thursday, we've got job cuts, unemployment claims, some more PMI. Right, that's all happening in the first 30 minutes of the market opening. Bostic will speak, FOMC member at 10:40. And Friday, we've got average hourly earnings, non-farm employment, and unemployment rate, 8:30. So that's before the market opens. And then at 9 o'clock, FOMC member Williams will speak. So as I see, there is a red folder every day this week. There is a red folder Monday, Tuesday, Wednesday, Thursday, Friday, Saturday. Not Saturday because the market's closed, but y'all got my point with the song. Every day of the week, there's a red folder. Good afternoon, Ward. Every day. So what do? Trade what we see. We trade accordingly. Trade accordingly. I had a car. The first car I bought in my life for myself, when I came out of college, I bought a Honda Accord. I got a really good deal on it. It was brand new. Well, brand new from the standpoint of it had like 300 miles on it because it was a dealer car, but it was one of the cars that the people who worked at the dealership were driving. So anyway, it had 300 miles on it. So it was a new car. So, but it was marked down because of the 300 miles. And what I did, that was back in the day because I bought that in 92, early 90, I think it was 92. I graduated college in 92. Been a long time, right? Anyway. That was back in the day when you put tags on the front of your car with different things, those airbrush tags that you bought at the flea market. That was back in the day when you did that. So my car, I had a Honda Accord and my tag on the front said accordingly. Now, when I think back on it, even after when I had it then, I was like, accordingly what? Like act accordingly, behave accordingly, look at my car like what accordingly what? When I thought about it, it like needed something else. Just saying accordingly wasn't, it was a play on the car name, but that's all. I was like, anyway, I was on trend because everybody was putting those airbrush tags on the front of their car, and they wasn't going to leave me with my brand new car. Well, it was brand new to me. It was brand new because at 300 miles, it's still brand new. So that's what's going on. Okay. Stay on track, Arlissa. There we are with that. Let's go look at some stuff from last week. What did the charts do last week? Okay, let's type in the right ticker. There we go. SPX from last week. Come on. Come on, please. I don't know why this won't move. There you go. What are you doing? I don't know what this is doing. Why are you tripping? Okay, I'm on a smaller time frame. I need to be on at least a daily chart. There we go. I'm on a daily chart now, and there we go. This is what last week looked like. I can actually switch over to the weekly chart and move it, but these were the 5 days here. For the week, we probably ended up, there we go, a green, kind of doji-ish looking green, but green nonetheless. Had a higher, wick on the top than on the bottom. But this, it falls in the 2 up category because it did close higher than higher than the high of the previous day. Yes, it closed higher than the high of the previous day. So it did put us in a 2 up in force, if you know anything about the strat. Okay. But not a big strong wind, probably because we are now at, again, all-time highs, or at least we went there on Friday, because that spot 57.67 is an all-time high. So we're there. And what happens next? Not a whole lot of juice. Somebody's got to come up here and decide they want to buy stuff at this price. Otherwise, we don't have juice up here. You got to have the juice. Let me go look. I want to change this to include. Here we go. I want to include the volume. You can see what the volume's looking like up here. Show volume subgraph. Options. Show volume subgraph. You can see. Okay. Show it. La. Why aren't we seeing the volume? No. Let's go and see. Maybe I need to check another one. Show volume. I don't need it on futures and forex, but it should be showing up. The volume should be showing up. Maybe I need to go to a smaller time frame, but that should not matter. The volume should be showing up down here. Let me see if I change it to SPY. If I see some, I guess the volume would be attached to shares, not attached to SPX, which makes sense. Volume is how many shares did they buy. So that could be why there's no volume attached to SPX. But we can see on SPY what the volume was. Volume down here is falling off a little bit. Now this is SPY, which is not, I don't know if that's an accurate representation between the two, because SPX is only looking at options. But if you're looking at SPY, you see that the volume is kind of falling off. That could be why there's the price has kind of, I'll use the word stalled, but I'm using it quite loosely. Okay. SPX, let's go back to that. Let's go back to SPX. This is what the weekly looked like last week. We are still obviously in an uptrend. We did have a bit of a pullback. We have a little bit of selling pressure. It just stands to reason we need to wait and see what's going to happen next. All right. Wait and see what's going to happen next. Let's go on to SPY. This was our week look like. Very similar chart to SPX. Let's go to the daily chart. Now it looks like here we hit our all-time high, and it's pulled back a little bit to say, Now, I've heard it said before, and I happen to agree that very rarely does a stock hit all-time high and keep pushing. Generally, it's going to hit the all-time high and pull back. It's got to get up there and say, well, let's just test this out. Let's see what's going on up here. If we test this out, can we come back up here after we test it out? What you got to do to see. Testing to see the water good up here. Is the water good up here? And if not, then we have to go and, try again later. I really want to, there we go. I need the properties. I want this to extend. Nope. Where's my extension? There we go. On and on, on and on and on and on. That's my broadening formation. I need this in another color because that's not dark enough. I maybe just a little bit thicker. You can save as a default. Okay. Okay. That's the broadening formation that goes along with SPY. It's kind of hard to do broadening formations when something's just going up, up, and away. It's a little difficult to do it that way, but potentially can. All right, let's go with just that top side and leave that like that. Okay, what do we see going into next week? What do we see going into next week? Well, we got a little bit, could be a little bit of potential pullback. We left a gap down here. A gap has been left behind, and what's left of it is just this part here. That's what's left of the gap. If the price action in here has filled the rest of it, so this is just the little bit here is what's below us. Above us, price discovery. Above us is price discovery. What I would see, and I don't give investment advice, but I do know that SPY's got to pull down some. It's got to pull. People who are up here at all-time high are going to sell some. And then you may get a little more upwards, but you got to come down and get some strength before you can go on back up there. You got to come get some juice. Okay? So keep that in mind for SPY. Let's go look at triple Q. Triple Q, lots of lines. I'll be struggling with the lines, so clear the drawing set. I have to clear it because otherwise I can't see what's happening. Okay, let's go see. We got a little bit of gap down here. This is the daily chart we're looking at. This is the gap that was left behind in the tech space. Come on. There we go. This is the gap that was left behind in the tech space. Close to open, that whole thing. Yep. It's not at all-time highs. Triple Q is not at all-time highs. So it's could be some room. Okay, let's put a little resistance up here. See what's up here. Now, what I want to look at, let me see if I can get us on a higher time frame. I was going to look at us broadening formation, but this maybe would be a smaller interior one. Potentially here and here. Of course, we've got some stuff happening up there as well. But notice how the price is kind of dancing along this line. Peon touch, peon went out, came back. All right. That's triple Q. What do we have going there? If we were looking at, this is a weekly chart. So if we're looking at what could happen next on triple Q, well, how did we end? How did we end the day? We ended the day, hit our resistance, pulled on back. Oh, this is the weekly chart, sorry. So we are and we right up here or it went into what would be a resistance zone. Went into a resistance zone, which honestly could also be categorized from what it appears, could be also maybe categorized as a supply area. It popped up in there and fell out like, nope, we got what we needed, came on out. We'll see what happens when it's retouched again as to whether it's supply or not. Okay. That's the weekly on triple Q, and the daily on triple Q shows that we hit the resistance, as I said, at 493 and pulled back some. Got a gap below us that's needing to be filled, but all this little stuff in here is also going to play support. All this little area right here is also going to lend support. So it's not going to potentially fall so far. Notice we got a touch back here in this area, which that's why we were in support there, this right here. And I know when I put this on as a hard line, that's not, support is not a hard line. Support is an area and a zone. So keep that in mind. Okay. Let's look at DIA. What did DIA do last week? Oh, look at that wick up there. This would be called a shooter. Shooter kind of gives you the idea that we might be going down a little bit. Just a little bit. Just a little bit. Yep, so we got our top and the top here. Got a bit of a broadening formation there. If I was going to push, I could go with here, but I don't like that bottom. It's harder to draw the broadening formations when you've got upwards moving. So much of a trend. So much of a trend. Okay. That's what we had last week. Let's go to the daily chart on DIA. Got a little bit of wicking going on. Okay, a little bit of a gap that was left there. There's actually one that's here too. Not much. These gaps aren't big, but that doesn't mean they're not present. All right, doesn't mean they're not present. Looks like that one there, closed to open. Yep, this gap got filled. Close. Actually, this one is not accurate. Hold, please. This gap actually goes down to the close of this red candle, which would be down there. Close to open would be that gap. It would be a little bit bigger. Notice the price here touched it. Well, it was actually a bigger gap. It was from the close to the open of this. So really the gap was all of this. The gap was all of that. From the close of here to the open of this next candle on 9/19, but then subsequent price action closed a lot of it. So now what's left of this gap is that. Okay, the smaller part we have left, that's what's left of the gap. Okay. And there's a little bit of one here. So there's several below current price, and this wick may be telling. Close to open, but I'm gonna subsequent price action has us right there. Okay, few little gaps below DIA. It might run down, grab all this, whoop, and go on. The lowest gap is down at 414, and we're currently on the all-time highs at 426, which was touched on Friday. That was touched on Friday. All righty, let's move forward. We'll come back to our charts here in a minute. I want to celebrate good times. Come on, let's celebrate. Last week, I'm still dancing. Last week, 19 out of 19 profitable trades. 19 out of 19, 100% win rate. If you traded anything on the option seller trade list, and if you traded with these strikes, now if you picked some other strikes and it didn't work out, don't be blaming us. Don't be blaming us if you tried other strikes and it didn't go. But if you went with these strikes, then you would have been profitable. Stacey, you know we got to have fun over here because it's a lonely road. It's a lonely road here. Okay, so all the trades last week went full throttle. Yes. If you traded something off this week, then put me or put me something in the comments. If you traded something off of our list last week, put a me, put a I did, put a I made some money, put some money bags, put something in the comments. Let us know that you were here with us last week and you made a few dollars. I actually traded, my Exxon is not on here. I traded Exxon based on that previous Friday. And I also did a SPY for the week. I did the weekly on SPY last week, but there was all this goodness was here. Yes. Exxon fell into the XLE and the CDX space. So I went with Exxon instead as a call credit spread. Actually, I think I did Exxon as a an iron condor. Yes, I did. Tanya says me. Stacey said me. Yes. Made a few dollars off the option seller trade list. All right. Clap it up, clap it up. It went well last week. So I also wanted to share with you. I use Peakbot. Y'all know that I'm an influencer for Peakbot, and I use it for automated trading. I use Peakbot for my automated trading, and I do my triple Q, right, and IWM. I do triple Q and IWM. I figured those two are the ones that are I'll say the most different, because before I was doing XSP and triple Q, which XSP has a whole lot of things in there together with triple Q. They're both in text based. I know they don't run one for one, but I was like, I felt like triple Q and IWM were literally two different things. So those are the two I trade on a weekly basis. Last week, well, actually, I started last Friday because I enter on Friday for Monday expiration. And then Thursday and Friday, I didn't trade it for all the reasons. I'm not even going to go through why. But so 4 days. Triple Q, I collected $485 and closed for $303. So I had $182 in profit. IWM, I collected $352 and closed for $315. This one didn't go as well last week, but one of these days, I made an error. I made an error in closing. No, not closing. I had made an error because I adjusted my close order to where it would close, but then I didn't watch to make sure it closed. I put the close order on right around where the price was, but I didn't linger to make sure it actually picked up that order, and it didn't. By the time I got to the end of the day, price in IWM had completely recovered, and because I was closing it for like $10, no, it might have been 15. I was closing it for 15 or 20, something like that. And it was set to close. But again, I didn't watch it all the way to make sure. So then by the end of the day, I started doing other things, forgot all about it, to be honest. And by the time I got to the end of the day, IWM had completely recovered, and the trade was then breached. So I ended up paying what would have been max loss, which means, but that was $50 per contract that I had to pay to exit. So that was money I really didn't have to lose on IWM. That was a user error. Don't worry about it. That won't be happening again. Okay. What I do though is I do set that. Well, I don't set. Peakbot sets the close orders at $5. So if it gets to $5, it closes on its own. If the price is dancing around and not wanting to do its thing, and we're at 1 o'clock, I look at the chart and everything, and I may adjust it to whatever the price is. And at the time, it was actually at $20, and around 20. It wasn't exactly at 20. And I think I might have put the order in for 20. And it was maybe 22 or 23, and it went the other direction because I wasn't watching at all, which is a plus. That's a plus for this. But I ended up getting to like 330 or 345 and was like, what is IWM still doing here? And of course, it was like worth $90 by then. And I had 3 contracts. So I had to pay that to exit, which was part of my losses right there. But, I'm going to eat that. But I still came out profitable for the week. Even with that being said, even with all that happening, I still made $37 of profit last week. When I combined these together, I made $219, and I used $500 of collateral. Right? I made $219 last week on my automated trading, which means Peakbot does the work. Okay, here we go. Somebody else, some entity, the automated trading bot enters the trades for me. And actually it sets the close order. Many times I adjust the close order because I'm an active trader and I can see what's happening. But if you aren't one who wants to be at all involved, you can go to use Peakbot and do automated trading with them. Right. I'm going to put my little link in the comments in case you decide you want to go and give it a look-see. And if you've got a job or you're busy during the day doing other things, but you still know you want to be able to make money as a seller, I use it for the iron condors and for the trend spread bot. Sometimes I use it more for the iron condors, but they actually have the trend spread bot, which will also enter stocks that you choose based on the trend. So you choose the stock, and whatever the trend is, the bot will enter that trade for you. Again, I use it for the iron condors. I collect about between $45 and $50 per contract on those. It's iron condors, are put credit spreads and call credit spreads together. And I collect about $50 each entry, which means I have a max loss of $50 of my money, and because they gave me $50 of the broker's money. So that 1-for-1 is great for me. I'm all for that. I'm all for using my $100 and collecting 50. And if I can keep 40 of that, even if I keep 30 of that, I've made money. Because if I put up $100 and I make 30, that means I've made 30% return on my collateral. Yes, they said you got to learn how to do iron condors. Yes, you do, ma'am. And you're in the right place to learn it. You with the one who teaches it. And if I do say so myself, this is what we do in here. This is my strong place. Selling options is my strong place. This is what we do. All right. That was a 43.8% return last week on the collateral in 4 days of trading. Basically hands-free and automated fully. If you can let it be completely automated. Again, I step in and do some of the work. And here's the link. Use peakbot.com/E2T. Okay. That was my result of my automated trading last week. And, if you got some questions about it, you can send me messages, or you can, reach out to me in the Telegram or wherever else and ask me about it. We can talk through it, and they'll give you a walkthrough. One of the guys over at Peakbot will give you a walkthrough if you're interested in starting up with them. Don't forget to tell them our Alyssa sent you, though, right? Don't be over there acting like you found your way on your own. I just stumbled upon. No, our Alyssa sent me. Tell them our list sent me, okay? They'll know exactly who you're talking about. Now, our list for this week is long, but it's got some goodness in it. The put credit spread list is quite long. This list comes from Peakbot, again, the watch list on Peakbot, and it's generated by the 50-period EMA. The 50-day EMA tells you whether the stock is bullish, bearish, or neutral. If a stock is bullish, I put us in the put credit spreads. If it's bearish, you got call credit spreads. If it's neutral, I put us in the iron condor. That's where that's how the different stocks end up in different categories. I almost said stratagories. That's how the stocks end up in the categories. Okay. That's how they end up in the categories. So let's look. I want you all to take a look here and let's see which ones we want to investigate further. What do we want to look at? Which ones do we want to look at closer than close? Which one do we want to look at? We know we got the Qs. We know we got SPY on here. This is the first time I saw VOO on the list. VOO is one that people are liking to trade and like to buy, definitely for their stock portfolios and their 401ks. So we can look at VOO if we want. As Stacy's suggesting, please hit the like and hit the thumbs up button, please. So that way the platforms can tell the people that we're here. No matter what platform you're watching me on, please go ahead and hit the like and subscribe button. The like, the thumb up, tell the folks, yep, we like what we're seeing, and they'll push it to more people. That's how that works. It helps the channel. It helps us. It helps you. It helps all the things. Okay, what else do we want to see? I see we got XLU on the list. I wrote it down. What else do we want to look at? What else do I find interesting? What else is interesting, Arlissa? Say we got some 2.5 spreads on here. Mickey D's, Microsoft is here. What else do we see? CVX, which is Chevron. Google. Tanya, you here? Why you ain't asked for Google? I think Tanya was here. Mark or Merck. It's Merck. The drug people. And the iron condors, we've got Dow, we got UPS, and we got Visa. Let me put some numbers down here. SPY 562, VOO 517.5, XLU 79, Google. Dow is 54 and 57. Oh, there you go. We wrote it down. Dow and UPS. UPS been having its own struggles too. I was looking at the FedEx chart yesterday. FedEx is trying to come back up and fill that gap. 270 on the put credit spread side and 280 on the call credit spread side on Visa. Okay, I think I got, if you see something else that jumps out, then let us know. Philip Morris, 3M, Lowe's, Johnson & Johnson, Gold, Cisco. Do we have any Coinbase or crypto related stock on here? I don't see any. And they may not be here because they're volatile, because this list is the low volatility or low volatility, low risk, lower risk area is what it is, not low volatility. That part, take that back. Yeah. It's the lower risk part of the list, not necessarily lower volatility, right? All right, I think I got everything. Coin is on your watch list, though. Yeah, Coin's been moving. Coin, Mara, some of those guys, they've definitely been moving a lot. So it's not on this list, but it can definitely be on your list, right? I think we're ready to go to the charts. I do want to make sure to share with you, I created this trades journal. Jamie said watch list, and it made me think about it. I'm not sure if it's gonna let me pull the link back now. I don't know if you all can see the comments from before the call opened. I don't know if y'all can see the comments. Let me see if I can grab it here, and that way we can have it and we don't have to worry about it. And put it back down there again. And I may be able, copy link. Okay, where'd you go? Oh, there we are. Let me see if I can put this, go back in the chat, in the comments. I want to be able to send it over to Instagram, and I can put it in Instagram from here. Let's see if I can put it in Twitter from here. Tweeter. Y'all in every place, in every platform can see what, let's see if I can get Twitter to open up, and I can go to the Arlissa is live screen and put this link in there. When I go to Twitter, it doesn't necessarily take me directly to my own page. It takes me to the where are you? Where are you? Hold on, y'all. Let me see if I can. I won't take a long time trying to figure it out, but it shows here that I'm live. Let me see if this opens it up. She's live. Yes, she is. She's on live right now. Let me put a comment in here. Okay. Trades journal. Okay. That way everybody on every platform should be able to see or have the link to, everybody should have the link to the trades journal. If they want to get a copy and use this for the week, use this for your week of trades, what your watch list is, what are you thinking about trading for this week, and put it on your watch list, right? You can say, these are the stocks I'm looking at. This is my entry I'm looking at. The entry is the, what entry criteria do I have? Should have made a little more room there. And what did you actually do? Entry time, price, the profit target, your stop loss. These are the things you should be putting down before you enter the trade. Ding, ding, ding. These are the things you should be putting down on somewhere before you enter the trade. And then the last column says, what were the results? What actually happened, right? This takes discipline. Blah. I already know it takes discipline to do this, to put all these things down, because we jump into trades. When I say we, I'm talking about me too. So please don't think I'm just throwing no rocks, because I'm not. We jump into trades, don't even be thought about Where's the profit target? What's the stop loss? What if I'm gonna do if? Why are we getting into this? Or why am I? Not why are we? Why am I getting into this trade? Does it fit my trading plan? Is it going with the strategy I'm using? What strategy the people who using, who's giving it to you? What are we doing? Are we entering just because we got FOMO or what? I won't go in that rabbit hole because I won't be fussing at nobody but me. But I'm just saying, you can use this trades journal to keep track of that. You can take it and print you a copy and go on from there. Okay, let's move to the stage. Coming to the stage. Coming to the stage. Let's start with Visa. Did I write that down? Oh no, that's not the one. One of y'all asked for Google. So let's start with something that y'all asked for, not what I asked for. Okay. What are we on? This is the daily chart. I probably should have left that where it was because that was on the, let me go back. Let me go to the weekly chart. See what we see. There's a gap here. Come on, Cletus. Okay. I need this to have an extension on both sides. On and on to the break of dawn. There we go. This is Google. This is the weekly chart of Google. That's what we're looking at. Okay, we've got some support and resistance. $168.26. We have some resistance. We just filled this gap in. Notice on last week we filled that gap, but look how we opened and closed and almost opened and closed and went to the exact same spot. Went back to virtually the exact same spot on top of that gap, right? So now that part was closed based on this. We've got us some support down here. Taking him off. We'll leave that gap down there for a minute because it is one. This is going to be some support down here in the 159 area, 159, 160, somewhere in there. That will be some, right? It's based on this over here. I'm not sure what that line is based on, so we're going to move it for now. All right, that's what the weekly is looking like. Let me see what we have on the style to see if I missed any pieces. Something is happening in here in 174 area. Up in here. 174 and some change. All right. That's what we got there on the weekly. Let's switch over to the daily chart and change ourselves back to our candles. All right, we've got a gap we need to take a look at. Close to the open, which would have been up there. Price pulls back. There we are as far as that goes. This gap here was filled by price action last week. There's some gaps above us, though. Let's put on some resistance lines. There's that one, but there's a gap up here. Okay, I got us on what? Put credit spread. We got Google falls. Sorry, Google was on the call credit spread list. Yep. Google's on the call credit spread list. It's been hovering in this zone here. Call credit spread with 170 as the call strike, which puts us above these two resistance and right at the top of, or the bottom, sorry, of this gap. 170 right at the bottom of this gap. Let's get us some words. PCS 170/172.5. Okay, that's what we got going there. Let's go see what kind of money. Let's go see what kind of money and see if we can put our trade on. 170 has a probability out of the money of 82%. 82% probability out of the money. 170, 172.5. Looks like here it's paying about $33. The market is closed. So, but let's go ahead and turn it on. Tomorrow we'll see if it can pick up. I got to make a change. I need to make sure that I put GTC in there. That's a waiting order, so I can make sure that if it doesn't pick up tomorrow, it will still sit here and I can still see what's going on. Okay, putting Google inside of our order box. Okay, I see you, Greg. We'll get to that one soon. The other one, XLU. Come on, Theta, work it out. You know Theta will do its thing now. Theta will do its thing. XLU, another one that is going. XLU is what? Utilities? Yep, the utility sector. The XLU is on the bullish side, and it's got a put credit spread that's going on with it. Put credit spread 79.57. It is dancing around up here, though, in this resistance area. Okay, we do have a gap here below us that may pull us back. The close to the open. There we go with a little bit of candles taken off. There you go. There's that gap there. I'm going to change this. The gap, the top and the bottom of the gap will provide some support. We also have some support right there at 79.23. What we have is 79 on the put credit spread side, which is fine because you've got a couple of levels that are between current price, which current price is 80.42, and the 79. Now that's going to feel a little close. It's going to feel a little close, but let's look at the probability out of the money and see how it's okay. Probability out of the money, 77% is at 79. Okay, is at 79. There's pretty good volume there too, which means people are expecting that it will get down there. Right? People are anticipating that 79, 78, 79 is what we're looking at. Change to a vertical. 78, 79. It's a 0.5 spread now. I usually change it to a 1 spread. You can leave it as a 50-cent spread if you're happy with the money. 78, 79. At this point, I'm not fond of this money, but I will change it to at least 10%. Got to get my dollar in there to pay for the fees. And I'll put this order on to see. Now, this isn't the best way to set orders. This isn't the best way. The best way to set orders is to look at the chart and say, okay, I see support at 79.23, believing that's going to hold. And what you then do is you right click and create you an alert. Create alert here. I'm not sure if y'all can see this. Create alert. And you want to create the alert at 79.23 at or if it's at or below. Of course, you want it to be above, hit it and going back up. And then this would be your put credit spreads entry. Okay. What you're saying here is I want the price to come down to the support or into this general area and turn around. And after a reject of the support area, then you can enter your put credit spread with the belief that it'll hit support and then go on up. You want to watch it to make sure it's actually doing what you wanted it to be doing. And when it is, then you enter your trade. That's going to give you good premiums. That's going to give you the motion, the upwards motion away from your strike. That's how you want to do that. Okay. That's how you want to do that. You want to enter, not necessarily while we're here on a Sunday night call. What you can do is put it there and then let it work. Right. I'm putting them on in my sim because I want to make sure that when I come back to our call, I see which ones we're supposed to put on. But this is not the most optimal way for you to do it. The most optimal way for you to do it is to say, okay, I want to trade Google. Okay, I want to trade XLU. I'm going to look at the chart. I'm going to do my support resistance, whichever you're looking at. And when it hits support, that's when I'm going to, hits and rejects. That's when I'm going to enter my put credit spread trade. That's really what you want to do when you're entering, all right? You don't necessarily want to enter these not as options and enter these in the evening. Let's look at Tesla. Tesla is not on our list, but we can check it out and see what we got going. There was a gap here that got filled this day. There is one down here. Now, Tesla is, according to all the peoples, on its way. It's got somewhere to go. Got somewhere to go, and it's on its way to going. All right, so I see some support down here at 232. There's some more support right in the 250-ish area. Let me change to the line chart so I can make sure. Oh, no, that's all momentum. There's something in here. 243 area and a little bit of pullback right there at that 254 level. I was thinking something in here was going on, but you can't go with that chair if there's not enough room. I got to have room on the chair. Style chart can do. All right. This little pause area where this doji was is what created that support area there, that 254. There's no gap there anymore, though. That gap was filled by 924's price action. Okay. So do you chart the daily chart? Yes, ma'am. I usually chart the daily. I will look at the weekly too to see what's going on. But for the most part, I'll chart the daily to see what's going on there. Weekly gives you a bigger picture too. So don't neglect the weekly. Actually, I do the broadening formations and those things that I do those on the weekly chart, because weekly and monthly, that's going to give you a where can price really go kind of thing, right? Okay, so this is what we got here on Tesla. It's coming into some good resistance. This goes up to 271 though. So you do have, even though it can go into this zone, there's a good little wick up here. All right. And this very well may be a supply area, because you see, after it hit here, it came down really hard and it fell down a good little ways. We'll have to see what happens when it hits that again. But listen, I want to make sure that you all understand that you're trading what you see, not what you want to see. Because sometimes we're like, oh, Trev, Tesla's going to the moon. And it might one day, and it might today, but you need to trade what you see, not have to have a bias and get yourself caught in a trade because you just can't see what's right in front of you. And the reason I know this is because I've done it. I've done it. Oh no, I believe it's gone. I believe it's gone. Oh no, I believe. And before you know it, it ain't doing what you believed it was going to do. And you're stuck in a trade like, I thought it was going to do. I thought it was going to do. It didn't do. Okay. So anyway, this is where we are with Tesla. What I see for the week, if I was looking on, let me go look at the weekly chart first before I say what I see. We're definitely on an uptrend. We see that we did a pullback here. It's coming right into this resistance area. I don't really know. Let me see. Let me put another line up here based on this. I feel like Tesla wants 300, but you just need to know that when it's hit these zones in the past, when it has come into these same zones in the past, it has hit them and pulled back. It hit this one and pulled back. It hit up here and pulled back. It hit here and pulled back. This is the same area. We're in the same area where it has not been able to get through in the past, right? So keep that in mind when you're trading it. At this point, I do see I would probably go with a put credit spread under some of these supports, and I would look at a call credit spread above this 299, which would be 300 is a nice psychological number. So I would probably go with the 300, and I would do something on the put credit spread side but you see, every time it comes up in this area, it rejects. That doesn't mean it can't. And now that it hits enough times, it goes on through. Let's go look at the numbers to see what numbers we could potentially see, right? Again, I want you to trade what you see, but I see 242.5 on the put credit spread side. Probability out of the money is 78. And on the call credit spread side, if you were feeling froggy, 277.5, that's 17 points away. This is 20 points on the IV. So I would probably go at least that 20 points, which puts us at 280. Yeah, I would go at least there, 280, 285. So You use all the pieces to help you to see where stuff is. We use all the pieces, right? And if that means probability out of the money, the IV number on the regular option chain, you're going to see that MMM number. You want to use all the things, right? A 280 or 285. So let's see what kind of money would Tesla work with. If we were doing 280, 285 is going to pay $87. 280, 285 is paying $87. I'm going to go ahead and put this in our little dealio. And the bottom was 242.5. 242.5 is paying $49. What are we at? $120, $130? Good till canceled is make it an even 50. Might as well be something like that, right? Let's go see what I put on the 87 and 50, 87 and 50, $137 was $140 on a 2.5. Well, sorry, a 5 spread. On a 5 spread. Actually, you could do 2 of these put credit spreads to match up the money that you're putting in. You're putting collateral of 5 spread on the Tesla top side. So you'd want to do 2 of these put credit spreads so you can use that same collateral. All right, I'm going to go ahead and change that so we can see a total of how much money we could potentially take in. Okay, so if we take $100 in on one side and we take 87 in on the other, that's $187 on a 5 spread, which means we're putting in like $313 of our own collateral. Okay, that is Tesla. Yes, that could be one, Tanya. That could be one. Let's look at UNH. UNH has had pretty good little premiums. I've noticed some decent little premiums. Look, there's a little bitty teensy gap here, but let me go see to make sure. There's a little bitty, the close to the open, a little bit of pullback. There's a wee bitty gap right there. You see, I haven't charted UNH shoot in forever. Not in my sim for sure. This is the weekly chart. On the weekly chart, we've got some stuff going on. Right, UNH support would be here. All right, let me see what we could do with a broadening formation. Swing high. Here we go. It's not quite at the broadening formation, and this would be what they would call a hammer or very close to a hammer. It probably would need to be a little more filled to the top, but it's giving upwards actions, giving wicking. All that downwards wicking where they were selling pressure, but the buyer said, not so. Close. There's a gap here. I missed it. Let's go back and get it. We go from the close of the candle to the open of the next candle, which would be there. So there's a gap down there that it needs to come grab the rest of that before it can keep it pushing. Okay. So just keep that in mind. Let's see what we would see. I'm seeing put credit spreadish, but I do like this 607 being the all-time high on it. I do like that as well. As far as iron condor action, and it's got some room. Let's see. Got some room back to the broadening formation. The broadening formation is up here like 614. 613, 614, somewhere up in there. So if you could get up in that area for your call credit spread strike, you might have some success. Nothing is ever promised to us. Okay, 567.5 is on the put credit. It's a 5 spread, which I think is a 2.5 spread up here, which I think is interesting. It's a 2.5 spread, even up as high as this. 595 is a 78% if you wanted to go up one more, because you actually could. If you're doing an iron condor, you could definitely go up to the 80% probability out of the money, because you got a little more room and you're going to take in money on both sides. So let's go see what the vertical offers. I picked 565 on the put credit spread side. Looks like that's paying $29, which again is over our 10% that we like to have. And to go up to 597.5 is this one here. That one's paying another $40. So $30 and $40, paying $70 for a 2.5 spread. $70 means you're going to put up 180, right? of collateral, but you're going to collect $70, which the $70 is about a 30% return on your collateral money. Yes. Yes. Zabot the midget. Hello. Black Beauty Machine. Hi. UNH has earnings on 10/15. Okay. So if you're going to do whatever you're doing, do it before 10/15. All right. Let's go look at VU. Let's go look at VU. What? Oh, Lord. Oh, Lord. What's all this? Clear the drawing said, I haven't charted VU in a long time. I'm not sure why I got stuff up there. But let's see. I'm still on the weekly chart. Let me switch back to the daily. Switch back to the daily chart. There we go. I appreciate y'all for hanging out. Please be sure to select the bell, the like button, subscribe if you haven't. Thank y'all for hanging out. I really do appreciate that. But I want to make sure that the YouTube universe, the YouTuberverse knows that y'all like it here. We actually like being here with her. Show more people. Show more people. Go ahead and click the notification bell. Click the thumb up saying we like it. We like it. Okay. Let's see what we have here. So resistance is up here at 529.76, right at 530. That's an all-time high again for VU. VU. I was thinking of that Patti LaBelle song. Was that Patti LaBelle? No, I'm thinking maybe it was Patti LaBelle. Voulez-vous coucher avec toi? That is Patti LaBelle. Voulez-vous coucher avec toi? Yep. Okay, I'm gonna stop because y'all have been to have me on the copyright list at YouTube. Okay, I see that it's definitely into a nice little seller's area, but it is bullish. To be what I would call bullish. Let's see what we can get on the weekly. Get us a broadening formation on here. Pew, pew. There we go. All these right here, hard to do. The bottom, I could do something like this, but that would be so harsh. But I mean, it could. I don't like it, so I'm not doing it. I don't like that. More of a channel. Basically, if we were going to do that, we got more of a channel forming. And it seems to be a rising wedge. It's rising and getting tighter, tighter, tighter. Whoop. And so now we're up here at the top. It could definitely bounce back out of there and can do its kind of thing and keep climbing, right? So this long wick at the top left us with what would be a shooter or looks a lot like a shooter, which may indicate some more downwards movement, seeing that we hit that all-time high. And remember what I said earlier, that when you hit the all-time high, it's not going to necessarily push through there on the first try. Okay, that is a Patty classic. It's not going to push through on the first try. So you need to know that you can potentially trust that to pull back some. Let's see. Don't know how much, though. Probably going to pull back to support. Don't know how much. So let's go with what we see here, though. Go above that 529, and we could potentially go below this, go to the below this gap, or we can go to the top of this gap. Both of those may work for us. I've got VU as a bullish 517.5 is what we have underneath this here, 517.5 underneath this support, which is 2 or 3 supports away from where current price is. 517.5 on VU is paying $30. $30. Okay, I'm gonna go ahead and see if we can get, oh, that's over 10%, so we can work with that, right? I'm gonna do SPY and triple Q also, so y'all hang out. Don't be disappearing on me until we make it through the indices. Okay, make sure we make it through the indices before y'all jump ship. Dow shows up on the neutral list. I could go with that, seeing that we've been a lot of weeks just kind of in the zone, get in the zone. And even here, we had a pretty big wick at the top here. So what we have, I will go up to a little bit higher to the top of that wick because that lets you know price could go there. All right, price could go there. When you want to know where could price go, I need to go to a bigger time frame because I want to put a broadening formation on this to make sure we got a good idea on where price could go. Okay. When you're on these two, you also may want to look at your VWAPs for the week, not necessarily for the day, but you want to see where could the VWAP go for the week. Perhaps you can anchor it to the Monday, anchor it till tomorrow when tomorrow gets started, and you can see where could it go from a statistics standpoint, where could it go for the week. Okay, so we've got some supports in here. We've got, where am I at? Oh, 54 on the put credit spread, 57 call credit spread. 54 below here, good. 57 is up here a bit. Is there something back here that we're not seeing? Wonder why 57 is up here. Probably because of the plus minus or the implied volatility number. Yep. So let's go see how much money can we get off Dow. Much money. We've got, what did I say? 54 on the put credit spread side. 53.54 paying $15. Yes, this is good. That's 15% return. And you've got 57.58. 57.58 paying another $10. Yeah, so $25 is what you would collect total for your one spread on Dow. I'm glad y'all are here. We here. Yes, I'm glad y'all are here hanging out with me. I really am. Okay, let's go look at UPS. UPS probably got it does a bit of a massive gap from earnings. It is back into its gap. It went up into it a little bit, pulled back, waited, danced around, went up into it again, pulled back. And it's back up in, at least now it's in the gap and it's green. Right, let's see. This was all the gap. And it's in there, but it's leaving some other gaps along the way. This is another gap here that has been left behind. So it means it's going to have to come back down and get it. There's one here that's been left behind. But the last day, this last candle on the daily candle, I'll make it bigger so everybody can see, is a shooter. Here we go. Let's make it bigger so everybody can see what I'm talking about. Let's give them something to talk about. There we go. This is a shooter. May come on. There's a gap here between these two. So as I highlighted, you can see that the gap is there. There's a gap that needs to come up. It needs to come fill this one, and it needs to come back and fill this one before it goes on about its way, right? Potentially, you never know how it's going to fill gaps, but it's down there. They are down there, and they're going to need filling. They're going to need filling. All right. So, what do we see? I have it on UPS on the neutral list. It's on the neutral list, probably because it's been in this zone for a minute, been inside this, but it's trying to get on back through its gap. I have 131 on the put side underneath this gap, and I've got 138 on the call side, which is about, there's another gap that was here. A few gaps are here. There's one that was here that needs to be filled as well. 138 is the bottom of that gap. And there's some support and resistance in there. If you look in here, there's some resistance places in the 138 area. So trade 131 on the put credit spread side, paying $16. And 138 on the call credit spread side, paying $12 more, $27 total. You can pull in on UPS. Visa. Going on the Visa. And then we'll move to SPY and Triple Q, because I covered everything else on our list. Let's go look at the Visa chart. We'll look more perfectly at actually, that's not the gap. It's not as small as that. The gap actually is from the close of one candle, which it closed up here. The close of one candle to the open of the next. That is the gap. Okay, that is the gap from the close of one candle to the open of the other. Big old gap that's there now waiting to be filled on Visa. And Visa's coming on up. Now the moving averages have flipped with a little bit of a downwards motion, but they're trying to level off a little bit. Right? This is going to the bottom of the gap is going to provide some resistance. The partway mark and the top is going to provide actually 4 places in there, but definitely those there are going to provide some resistance. There's also a gap here. Close of one candle to the open of the other. Those are some gaps that need to fill in. Okay, so Visa may go on up and try to get it. Visa is on the iron condor list because it's showing neutral. 270 on the put side, which would go right under here where the support is. Right under here. Y'all see that? How 270 is there, and 280 on the call side. 280, the bottom of this gap is the call side. Price somewhere in here is where when you're doing iron condor, what you're saying is we're looking for price to close between the call credit spread and the put credit spread. So we're looking for price to close between 270 and 280 when you do that trade. Looking for it to close between those two. So for 270, we've got $35 for a 2.5 spread. Yepper. And for the top, we've got 280, 282.5, another $46. You're going to take in $91. Let's go to monitor, make sure we see our numbers. 35, not 91, $81. Take in 81, leverage 170. $81 for a 2.5 spread is over 30% return on that money this week. And of course, you can close it at the 50, 60, 70% level. You can close it along the way. I was answering a question in one of our chat comments. It might have been a Facebook post about closing things early. It was in Telegram. You can close early. You can close each day. You can close whenever you want. If you're going to open and close the same day, though, you need to either use a PDT hack or you need to wait till the next day to close it. All right. Or use a day trade. If you are going to do that, just know you're using a day trade. Okay. If you're going to do it that way, just know you are using a day trade. Let's go with SPY. Let's look at the SPY. I'm going to go up to the weekly chart so I can take a bit better look. Okay. A bit of a better look at what I see. Definitely trending still. Broadening formation on the top. It is toward the top of that broadening formation. Got a little bit of a shooter going on right there. Looking like it may want to pull back some. Again, it walked right into an all-time high, and it don't necessarily push through immediately. As you see, it hit that all-time high and pull back. So we'll see what stands to come next week. This is the weekly chart. This is what happened this week, right? This gap that was here, I got to go look at it on the daily chart. From what I can see here, they're filled, but let me go to the daily chart to make a sure. Okay. Weekly chart shows there may be some downwards motion. Not investment advice. Okay, we hit the resistance area and pull back. This gap here is not filled. So that's why it's still here. Support is going to be in this area. Anytime you onto a chart and you can't necessarily tell what's going on with the price action, change it to a line chart. That way you can get a better look. Peaks and valleys is what we're looking for. Anywhere you got peaks and valleys, that's where you've got support and resistance. Okay, peaks and valleys. All right, put it back onto the candlesticks because we need to see the open, high, low, close. It's up here at all-time highs, but it's got some choppiness right below it. So those, you could expect that if it gets in there, it's probably going to chop around. Chop, chop, chop around. Close and open. All these were filled. Okay. So SPY is still on the bullish list, of course. No shock there, right? And for the week, let me put me a little note on here. Make sure that you're looking at the weekly, not the daily. I think I did that last week. I put the wrong numbers on here. But for the week, I've got 562 as two right in here. 562 put credit spread. What's that? 10, 4, 561, 562. Okay, let's go see what kind of monies. Let's go see what kind of monies. If you were feeling froggy, you could potentially look at the call credit spread side, but you need to be feeling froggy. You need to be feeling froggy. Okay, SPY and 562, I said. 561, 562, paying $17 for the week. $17 for the week. Let me take us up one more dollar and put us on good till canceled. Okay. Put credit spread on SPY. SPY remains to be seen. Now, the good thing about trading as a seller is we don't have to be exactly right on the direction. You don't have to be exactly right on the direction when you're a seller. You just need the price to not come back to your strike. You need the price to not come back to where your strike is. So you don't need to be right as far as direction goes, but you need to know where good price is not going. You want to have a good idea of where price is not going. Okay, that's all you do is be below or above that. You're in good shape. Triple Q is also on the put credit spread list with 477, right where I put that. 477 as the support, as the sell strike and support right here. It's both of them, as they say. Okay, 477. So 477, 476, 477 puts us on the $19 for a put credit spread. Let me go look back at that chart some more because I feel like I didn't look closely. This is the daily one. Look at the weekly first. Okay, this is our weekly chart of Triple Q. Why do all these charts, or is it just me, look the same? All these charts look the same, starting to look the same to me. Bit of a shooter, a little bit of wick down here. So there were some buyers. Looking at the monthly chart though, it's a hammer on the month. The last 2 months it's been a hammer, which is why you've seen it doing its going up thing. Okay. All righty, that's what we're doing with our indices and with the stock and the things that are on our list. I want you to make sure that you are utilizing this list, right? I send it in email. I put it in all of our telegrams. We share it on the screen on this call. You can use this list to trade as an option seller. If you're not, it does, Stacy, has daily expirations. If you're not sure how to use credit spreads, call credit spreads, iron condors, then I have so many videos on my channel, and I know there's at least one that's a full explanation start to finish. I've got one that talks about the money of credit spreads, basically how to enter, what stocks to use, all the things you want about credit spreads are. It's a big part of what's on my channel. So definitely go and look around in the channel and find out what you need to use in order to be able to trade credit spreads. Again, like I said, it doesn't matter as much when we trade credit spreads, whether you're right on the direction. You do want to have a bearish, a bearing, not a bearish. You want to have a bearing of where you think it will go, because it's going to help you set your trade. But you don't have to be like exact, like you don't have to move right now. You just need it to stay away from your strike. That's what you need if you're dealing with credit spreads. All right. Trades journal here. Write down the things that are on your watch list for the week. If you know you're watching Google, or you know you're watching VU, if you know you're watching UPS or Tesla or UNH, put them on this list, and then have it and write in here where it says entry criteria, write in, enter put credit spread as it rejects off of 275, whatever the number happens to be. That lets you know that you are planning on entering a put credit spread as it leaves the 275 zone, right? That'll keep you looking at one piece of paper all week. I create these things because they're things that I need to. So I create them. And then when I create them, I just share them with the people. All right. We share them with the people. Educator to Trader membership, which is where we are every week. We hang out together. We do all our stuff together. We're basically learning simplified strategies to help you create a full-time income in your trading with ease without having to spend all day in front of your screens. Many of us, me included, cannot spend the whole day in front of my screens. This is not where I'm at this point in my journey, right? I'm still in the classroom. I'm still teaching at the college. So I don't have the time to be in front of my screen all day, but that doesn't mean I don't want to trade and I don't want to make money from the market. So I have to use strategies that will allow me to not be on my screen the whole time, right? Okay, we're going to spend less time while creating more profits. Supportive community is what we have in the membership. We have daily profits. If you want to use the SPX or the XSP, we have several people who trade 0 DTE stocks, and they are doing fine. The 0 DTE indexes or stocks, and they're doing well with that. Okay, and we've got training on all these strategies. You're free to come join us. You can do bit.ly/E2T-membership. Or you can just go to my website, educatortotrader.com. That takes you right to the membership. It's one of the top icons because that's our premier product, is access to the membership, right? And we're here for you. We got a community, exclusive community where we all hang out together. We all trade together. I'm there to help coach and guide and all those good things. So if you want to hang out with us as sellers, feel free to come and join us, okay? I released this book several weeks ago, When to Use Credit Spreads versus Debit Spreads, because there is a time for them, a time and a place for all things. So you can grab that immediate download, educatortotrader.com. It's $5.88. This is the strategy I was just talking about, the spxplaybook.net. You can get the strategy for how to make 10% profits each day using 0 DTE options. Right, using 0 DT options, you can go ahead and get this from spxplaybook.net. Okay. Well, I've covered a lot of stuff today. Covered a lot of things, and I really hope you all got value. So please be sure to like, subscribe, put up the notification bell, wave, send me a message. If you got something you need from me, send me a message. We can talk about it. Look at the membership, all those things. We've got all the good stuff for you, and we want to be of service to the options trading world. Yes, I want to be of service to the options trading world. So if you need something, reach out to me, and I'll see how I can help. All righty. Well, I want you to do two things, at least, well, maybe three things. One thing I want you to do is I want you to stay green, which we can't do today, but I think you got the concept. And the second thing I want you to do is get this money. And how do we get this money? It is by preparing on the weekend for what's happening during the week. Money is made in the market on the weekend, not necessarily during the week. So it's all the studying. It's all the time on our charts. It's the time in preparation. It is setting up our alerts. All those good things happen on the weekend. So that way, when the week comes, we're ready. Our stuff is ready to rock and roll. All right. I'll make sure to see you in the morning, 9:45. Y'all know our morning calls have changed to 9:45. And that's what we're doing here. It's working out great so far. So we'll continue down that path until it's no longer, suitable for us. All righty, everybody. I want to bid y'all a fond farewell, and I will see you in the morning. Hasta mañana. Goodbye, everybody. Goodbye.